Hello and welcome to the Road to Retiring YouTube channel. Today I am looking at Google. The first thing I like to look at for a stock is its moat. A company's moat refers to its ability to maintain the competitive advantages that are expected to help it fend off competition and maintain profitability into the future. I consider a company to have a wide moat if they have an average compound annual growth rate of over 10% over the past 7 years in the following metrics. 1. Equity growth. 2. Earnings per share growth. 3. Operational cash flow growth. 4. Revenue growth. For Google, for equity growth this is 11%, for EPS growth, 19%, for operational cash flow growth, 14% and for revenue growth, 18%. This is an average compound annual growth rate of 15% across the 4 metrics. Additionally to this I like to see that the management are investing funds efficiently and I consider a return on invested capital of over 10% to be a good signal for this. Google's ROIC is currently 21% and has been consistently well above the 10% benchmark over recent years. Additionally to this I want to see that any long-term debt the management is taking on can be paid off. To measure this I want a company's free cash flow to be able to pay off long-term debt within 3 years. Google has $27 billion in long-term debt and $60 billion in free cash flow over the trailing 12 months, so I am confident Google will not be in imminent financial trouble because of this. Based on this, Google performs well on all metrics I like to look at before buying a stock, so now we have to consider what price I would buy Google under. To do this I estimate the value in 2028 and then calculate what value the stock needs to be now for a 9.5% compound annual growth rate to reach that value in 2028, including an additional 10% margin of safety. I estimate this value in 2028 in 3 different ways, using the price over earnings multiple, the price over sales multiple and the price over operating cash flow multiple. The average buy value based on these 3 predictions is $96.11, so I will be buying Google stock under this price. This value was calculated based on the following estimates: an earnings growth rate of 13.5%, share dilution of -1.35%, revenue growth rate of 11.35% and an operating cash flow growth rate of 15%. With the following multiples: P/E of 18, P/S of 5 and AP/OCF of 13. Comment below to suggest different estimates for these values and I can tell you how this will impact the buy value.